I see a world where borrowing against your Bitcoin will be cheaper, faster, and better, and more efficient than lending against US real estate.
And this is because
if you default on my loan, I can sell your Bitcoin instantly. Over the weekend, 24/7, over a holiday, doesn't matter. Now, I can also sell a fraction of your Bitcoin. If you default on your mortgage, I can't sell off your living room. Then on top of that, your house, even the largest, best real estate lending market in the world, is one country. My asset is global. It's a much bigger market, it's a much better asset, and it's much faster to move. So for all those reasons, I think it's going to be the world's collateral.
Mauricio di Bartolomeo is the co-founder and chief strategy officer of LED, a Cayman Island-based financial services company specializing in Bitcoin-backed loans.
Originally from Venezuela, he became interested in Bitcoin during the country's hyperinflation crisis, leading him to develop innovative financial solutions for crypto asset holders.
It is dawning on people that Bitcoin going up and to the right and that selling it is a bad idea. As you can probably imagine, the people that have used our product responsibly and have been able to manage their loans have made a tremendous amount of wealth by not having sold the collateral asset. Once you've diligenced the platform and you've gotten comfortable with the potential counterparty risk of that platform, your only other servicing or managing risk for the loan is your ability to add additional collateral and to plan accordingly.
how many people have gone bust? Is there like an approximate number?
Yeah, so on average, what we have seen.
Yo, guys, back with another episode, this time with another great guest. It's Mauricio di Bartolomeo, which is probably one of the coolest names in all of Bitcoin. So maybe you can tell me more about you and your name and where you're from. That would be certainly interesting.
Definitely. Well, thanks for having me on the show, and glad we made this happen. We've been going back and forth for some time, and glad we're finally here. So, Mauricio, my name is the first part of my name is from Latin American descent, so it's Mauricio with a C, not with a Z, which is the Italian way of doing it. And my last name is pretty Italian, which is where my dad's from, and where they currently live, actually. So now I was not born in Italy. I was born in Venezuela. I was born and raised in South America, and I experienced hyperinflation at a very young age. I was in the country when Chavez took office, and I was in the country as he proceeded to dismantle the economy and print into infinity. And it was that situation that got my family into Bitcoin, because as hopefully, I wish that wasn't the case, but as many will probably find out soon, when you start trying to take your worthless fiat into something else and start, opening your eyes as trying to opt out of the system, many nefarious governments will start blocking your ability to exit fiat. And the typical way they do this is by establishing what they call a exchange currency or foreign currency control, meaning that commercial banks, and the banks that you and I know, become unable to sell foreign exchange. They can only do so through an express mandate from the government, i.e., they can only sell dollars at fictitious rates to whoever is buddies with the government. So my family finds Bitcoin in hyperinflation. It was midway through 2014 when my youngest brother starts mining, and we started mining in Venezuela. And like many others, we realized that selling your Bitcoin was a bad idea. We wanted to grow our minds and didn't want to sell our Bitcoin. And making a very, very long story short, I came to Canada, got together with my friend from university, Adam Reeds, who's like one of my best friends, and we decided to find a solution for our problem, which we believe could help other people. And that's where really Ledin comes from.
Yes, exactly. Yeah, landing the company that you're currently working for, that you founded yourself, as you just said. So this is certainly something I want to talk about. I mean, the other topic is something we could probably spend some time on as well. It's so interesting. But maybe just one question, given the limited time we have, like, do you still have any connections to Venezuela? Is there still family living there or friends? And like, what are things right now, in Venezuela? Have things kind of calmed down, or is it getting worse, or like what's the latest?
So to answer your question, yes, I have painfully, the answer is yes. I have a lot of friends and family and people that I care deeply for that helped me, that raised me in many ways that are still there. The latest you heard about Venezuela was in July this year. We had our most recent elections stolen once again by the regime without publishing the results. Uh, and so that has sparked, unsurprisingly, another wave of despair in the country since July. And what I hear from my friends, most recently, which I spoke with one of my friends yesterday, is the things there now are the worst that they have ever been. And the worst that they have ever been in the context of he's, nearing 40 like I am. And that's the Venezuela we've seen. Like all I've seen is a Venezuela in decline. I have never really seen Venezuela progressing. To give you an example, the city I grew up in, Barquisimeto, which was the fourth largest city of the country, the skyline looks identical to when I left. I would argue worse because buildings and structures have basically collapsed. And so it starts looking, if you go to Cuba, I haven't been, but the references that I get from Cuba is that it seems that it be stuck in a moment in time. And that moment in time is the moment the country entered communism. So from that day on, all the cars are from the 50s. All the buildings were built in the 50s. All the infrastructure was built in the 50s. Venezuela is very similar, but with a 90s touch to it. Everything looks like it's like you go into a time machine and everything's like you were back in the 90s. And so in a bad way and not in a good way. So yeah, I guess I'll pause there.
Yeah, no, that's just crazy and so sad to hear. I mean, I'm just wondering from the outside, what's gonna how is this gonna change? What needs to happen? Is it just going down the drain ever more, or could there be any type of catalyst? Or I mean, probably as we've seen, as we said during these elections that were stolen. I mean, people were rioting, and some people were calling for things to change and like, oh, this could now be the moment. But it seemed like it's just back to normal or even worse, as you said now.
Yeah, sadly, I think it's natural to be optimistic and to have this hope. I think hope is part of human nature. But if you look at the facts and if you look at precedents, when countries fall into leftist authoritarianism, and by that I mean the ruling party du jour goes into bed with the army, right? And so when the guns and the politicians become one and the same, then there is no balance of power. What happens there is you have a group that basically controls the country, and it is a criminal organization, and they know that any ounce of democracy means that they are going straight to jail. Um, and so naturally, they do not allow it. And if you look at, cases today where you would say, oh my God, the poor people in Cuba, or the poor people in North Korea, or the poor people in South Sudan, or the poor people in Iran, Afghanistan, and the list goes on and on and on. And this is a list, like when a country falls into, try not to get too much into politics here, but my view is that when a country falls into communist authoritarianism, what you have is the people that could make a stance are the productive class, the people that have assets, that have means, that are educated. And when they are faced with the decision between dying or taking their wealth elsewhere where their wealth is welcome, they will always choose the latter by a large, large, large degree. And so what happens is that once a country goes too far, the productive class has no real incentive to fight because they are fighting an unfair fight, and they could use or better invest that time in rebuilding uh their moats somewhere else.
Yeah, exactly. I mean, that's exactly it's exactly right. I mean, in the end, you have like a few of the wealthy that then, as you said, they hop in bed with the ruling class, and then they get all the privileges, and for them it's just fine. They can live a good life in Venezuela itself, probably even. And the other people who don't want to do this, they flee. They go abroad. And when we were traveling all throughout Latin America together with my wife, I mean, we met so many Venezuelans and also people, who had like decent wealth, and sometimes it was even Bitcoin and these digital assets that helped them to kind of flee abroad with all these assets. And so you have this never ending cycle of like the good people are leaving and the other ones, they're just in bed with these, as we said, like the rulers. And so I think in the end, all we can do is just pray and hope for a better future. And hope that someday this is going to break down, as you said, and new things can move in. That's for sure.
Yeah, I mean, with Bitcoin, by allowing more people to access Bitcoin and stablecoins, really stablecoins are taking hold all over Latam, you are allowing them to opt out of their local fiat regime, right? Now, that's a good thing because it forces the regime to be in a constant state of inflation, right? Because everything they print, they can't access the bond market. Nobody takes them seriously anymore. All their only means to finance themselves is really printing. And the more you can force the printing back into, basically mirror it back into their face and say, like, we know you're printing, you're not helping us. The problem is that you can have all the pressure you want, but all that pressure is a forcing function, and the change comes through democracy. You can have all the pressure in the world, but if you don't have that lever of democracy, the pressure is just going to hit a wall, and eventually those people are going to get tired of fighting and just flee, right? And if you try to project that out, you look at a place like Cuba, right? Like the people that are able to flee, they choose to get on a boat and risk their lives to go to Miami because the 5 generations that came before them died trying to change Cuba democratically. So this is unfortunately what I think is going to happen in a lot of these failed states where no democracy is allowed. So it's in sort of for the Western world, it's not a problem until it becomes a problem, right?
Yeah.
For many years, you said Venezuela's not my problem. Venezuela's not my problem. Now immigrants, the worst kind of Venezuelan immigrants, are coming to your border in hordes, and now it is your problem. And so,
Yeah.
you know, it's also a matter of incentives, right? Like, what's the incentive for the world for the international community to do a military attack on Venezuela to change government? It's, these aren't the 90s anymore. You used to be able to say that, and people were like, "Oh, yeah, that's a good idea." But now, no one does that. It's kind of, we just kind of let them out to dry.
Yeah, exactly. No, I'm also not that much of a believer in these like political international committees and everything. They're just doing a lot of talk, but they don't follow the talk, so to say. They don't walk the talk. And then obviously the only hope I have is really like tools like Bitcoin and potential like other freedom technologies that enable these people. And obviously, if you are a realist, it's not that every person can like at the same time profit from this, and be enabled, but maybe one by one. And at least there's now some things that can kind of maybe help people to move to a better place and live a better life. So that's at least something which is great. But I mean, I would like to set the context also for today's discussion, because you already alluded to it, that you discovered Bitcoin and then kind of figured out, well, selling Bitcoin is not that great of an idea. And so this is really something I think now that the value of Bitcoin and the price is changing dramatically over the last few months, I mean, and then also influenced by people like Saylor, who relentlessly teach like the mantra of never selling your Bitcoin. I feel like more and more people are asking themselves the question, okay, what can I do? How can I tap into this value that I have stored in Bitcoin? And there the idea of borrowing against your stack is like increasingly coming up. So I kind of have the feeling that this is like some anecdotal evidence. If you also are on Twitter, you feel the vibes. And so my question to you would be, you have a business in that, and I certainly want to talk about the business as well, but do you feel this as well, that like things are catching up, and do you even see it in the numbers, that more and more people are actually wanting to borrow against their stack of Bitcoin?
Yeah, I would say your gut is absolutely correct. We have seen November is on track to be a record month for Latin. This quarter is on track to be a record quarter for Latin. All types of records are being broken. in this market. And I think so. To give you some context, we started this business. We announced our first ever Bitcoin-backed loan on November 2nd, 2018. And that day, Bitcoin was trading at $6,345. So, as you can probably imagine, the people that have used our product responsibly and have been able to manage their loans have made a tremendous amount of wealth by not having sold the collateral asset and maintaining their exposure to that asset. And the interest cost that they have accrued over the course of those years is a fraction, a tiny fraction of the value that they have created by not having sold their Bitcoin. So the idea comes from the very basic concept that a hard asset will accrue value over time, and a fiat asset that can be printed into infinity will basically lose value over time. So at Ledden, what we let you do is continue to hold your hard asset and take a debt on that hard asset denominated in weak currency, such that by the dynamics that power these two products, your relationship or your structure would benefit from a virtuous cycle of fiat getting printed and debased, and that wealth being reflected in the value of your collateral. So if, in short, you can own and hold your Bitcoin with Ledden while simultaneously shorting fiat currency. So I think one of my favorite descriptions from Ledden was something that Preston Pish called us, which is the speculative attack company, which is you can actually short the dollar with your Bitcoin through a product like Ledden. So in very short, you can access the wealth you have built with your Bitcoin and put it as collateral and borrow from it. Why I believe the concept of borrowing against your Bitcoin is hitting the zeitgeist is because the product works. This is exactly why we built this product. The people that took loans from us at 40K are beyond themselves right now because they've seen the value of their collateral more than double. All of the people that said a few months back, oh, maybe I'm not going to borrow against my Bitcoin. Maybe I'm just going to take the money I need now and rebuy again later, which is what we all say when we go and buy the Bitcoin, have realized that they can't now no longer buy as many sats as they had because they sold Bitcoin at 40 grand. Now Bitcoin's at $100,000. You can buy less than half of what you sold. So it is dawning on people that Bitcoin's going up and to the right and that selling it is a bad idea. And the other piece is that today you can look at platforms that have been in the business for now more than 6 years with a solid track record like us. And it's no longer a group of people that just showed up and said, hey, let me take your Bitcoin. I want to give you a loan. We are fully regulated entities with proof of reserves, published every 6 months. It's a completely different operation. We're powered by banks. It's very different than what you had for options, call it last cycle even.
Mm-hmm. Yeah, very interesting. I certainly want to get into this as well. I mean, the question I would have is like, or at least I feel like this way, as you said, Bitcoin has it has reached its potential, where sort of now it's on everybody's mind. And people are like, maybe a few years ago, they were like, okay, Bitcoin, maybe it can go away. And I'm not that sure. Even Bitcoiners themselves were not that assured, that this thing would really, really catch on. But now that we're at 100K almost, and maybe beyond in a few weeks or whatever, then people are like, okay, I think this is not going away. And that's why if you are a Bitcoiner and you understand Bitcoin, it's really, as we said, this hard asset. It's the hardest asset. It's 21 million. There will never be more. So you're even more inclined to not sell it. And that's why it's really like, okay, I want to try this out now. And I think that's really what's like intellectually dawning on people. I'm just wondering, kind of like, what now? Some people could also say we're in a bull market now. Obviously, as you said, November quarter, everything is picking up. These numbers, yeah. What happens to this idea of borrowing against Bitcoin if we enter another bear market? And we probably inevitably will enter this bear market. So, any thoughts on what could happen to this idea or the businesses at all?
So it's a great question, and it's a fun one for me to answer because we've been through one, two, I think it's three bear market cycles now. And what we find is that, to the point you made earlier, Bitcoiners don't ever want to sell. Bitcoiners believe in the appreciating power of Bitcoin. If you didn't want to sell your Bitcoin at 90, you're not going to want to sell your Bitcoin at 40, and you're not going to want to sell your Bitcoin at 60, right? So the Bitcoiner that that is our client, that finds value in our product, believes in the long-term appreciating power of Bitcoin. We have clients now taking loans at this price level, meaning that they believe that the Bitcoin price will be higher and that it's better on for they are better off borrowing from the Bitcoin rather than selling it. There's several benefits to this, and it's not just the potential appreciating power. A loan can also be a powerful tool for tax planning, because when you take a loan, most often it's not treated as a taxable event. It's treated as it's not a capital gains, or it doesn't trigger a taxable event. Whereas when you sell your Bitcoin, you are taking gains. So if you are somebody that bought Bitcoin at $10,000, you're going to have a massive capital gain implication if you sell at 50, at 60, at 70, at 80, at 90. And so many times clients, it's not just a function of how fast or far you think Bitcoin will appreciate. It's also a function of what are the tax implications of you selling versus taking a loan. If structured correctly, some of our clients are even able to deduct the interest expense from their loans from their investment income. So it can be incredibly efficient, but as you know, as Michael Saylor and others have popularized this idea that wealthy people do not sell assets.
Exactly. Yeah, exactly. That's exactly it. I mean, that's what's dawning on ever more people, like all the people in the fiat world that have gotten wealthy, like beyond imagination. If you take a look at how they did it, it's never by earning income or something like that. It's always by owning assets. These assets increase and then not selling the asset, but like obviously borrowing against them, just take on loans, as you said, in a depreciating currency. And so that's exactly the way to go. So that's so interesting that this thinking now kind of translates over to Bitcoin as well. That's really something I find so interesting. Yeah.
Yeah, and another thing a lot of people do with our loans when bear markets come is they see it as an opportunity to add to their Bitcoin position. So we see a lot of Bitcoiners coming to us in the bear market to borrow dollars from their existing Bitcoin and use the proceeds to buy more Bitcoin because they think it's at a great price. Now, with any collateralized loan, you must always account for potential volatility in the price. So the way, or one thing that you as a borrower needs to be very mindful of, is that the only collateral we take for the dollars we lend is the Bitcoin. Therefore, if the Bitcoin price drops and gets close to the value that we lent to you, our system will automatically have to sell that Bitcoin to make the loan whole, because not doing so would risk the integrity of the entire operation. So we try to be very clear with our clients, and we've built a world of features to help them protect themselves from moves in the market. But it is important, I would argue the most important consideration for you as a borrower, once you've diligenced the platform and you've gotten comfortable with the potential counterparty risk of that platform, your only other servicing or managing risk for the loan is your ability to add additional collateral and to plan accordingly.
Mm-hmm. Yeah, interesting that you mentioned these features. That's certainly something maybe I would like to dive into more deeply. But maybe also another question is, I don't know if you can talk to this, but like, have you ever like conducted the numbers on when you say you have loans outstanding ever since 2018? How many people have gone bust? Is there like an approximate number? Like that's certainly something maybe the borrowers would like to know. Like how high is the probability? And yeah, that's something that could be interesting.
Yeah, so on average, what we have seen, so I'll give you an example. Um, on the last 30% drawdown that we had, which was a period of 2 weeks or so, which was the yen unwind carry trade, or the yen carry
August, exactly. Yeah.
August, we saw about I have to double check, but we saw about 15% of our book get margin called, and about 2% of the loans got liquidated. But because so many people bought the dip, by the end of the day, our loan book had grown. So the new loans had far outpaced anyone that would have potentially gotten liquidated. And another thing that I will say is 80% of the clients that have had one of their loans close at Ledden because of a liquidation have come back to borrow again. So in many cases, a liquidation can be, some clients decide that they don't want to top up their loans because they want the loan to get stopped at a particular level. They don't necessarily want to add, because if they add and the price keeps dropping, then you will sell at an even lower price. So liquidations are, in some cases, believe it or not, voluntary. Like a client will say, I do not want to send more Bitcoin to this loan. I want this loan to get closed. In some instances, the client just overstretched themselves and didn't have enough Bitcoin to add. But I would say that's probably less than 5% of our clients now. That number has been getting better and better and better every cycle, because we, give them more education up front so that they can plan properly. And B, we've built tools like auto top up, which people can activate, and it helps borrowers top up their loans when they might be traveling or flying or out of coverage. And so it's a combination of education and tools.
I see. Can you maybe quickly explain? You mentioned margin call as well as liquidated. So, kind of,
Yep.
what's the difference there? Is there like a soft margin call first, and then at some point, if it drops farther, they get liquidated, or what's the difference there?
Yes. So, like I said, our loans start at 50% loan to value. When Bitcoin drops, that number increases because you're dividing the debt by a lower value of collateral. So, as Bitcoin price drops, your LTV starts rising. When the LTV reaches 70%, our platform starts sending you notifications to say, hey, Pascal, you need to add more Bitcoin. Your loan is close to a potential liquidation. If it reaches 80% LTV, we'll have to close it. And those notifications, you're going to continue to get them. There's two ways the notifications stop. One, you send more Bitcoin, your LTV drops below 70. Or two, the loan reaches 80 and it got closed, right? Our hard rule is do not let the LTV get to 80, right? We don't force you to say, Pascal, you must bring the LTV back to 50. You must have enough Bitcoin to bring the LTV back to a particular point. You can send however much you want. The only thing that we cannot allow is the LTV to ever touch 80. So, if you want to send a little bit and keep the notifications and keep your LTV over 70, like those theoretically, those could continue until it resolves. But the only thing that we are one of the things we're incredibly emphatic to our clients about is don't let the LTV get to 80.
I see. Okay, that's interesting. And how do you mentioned these features? So what type of features are they? You mentioned the auto top up feature. Do you have also some sort of educational posts, like where people can actually learn about what's going on here? What is even an LTV? And all these stuff. But what else is there in terms of features that you mentioned?
Yes. So we'll walk you through, in a margin call scenario or in a sending additional top up scenario. You want to do two things: add additional Bitcoin, repay part of the dollar debt, right? Like those are the two things that would make the LTV drop again to bring it back to below 70%. So number one is you can do auto top up. So auto top up is a feature that you can have at Ledden turned on, which means that, say you have a loan for, I don't know, 50K with one Bitcoin as collateral today, and you want to have an extra half of a Bitcoin kind of trigger ready to top up that loan in case there's a fast move in the market when you're asleep. Okay. So you will deposit that extra half Bitcoin to your transaction account at Ledden. That's the closest. Basically, it's a custody solution. The assets there don't get lent. They just sit in cold storage, and they're meant to be there to service loans if and when needed, or to trade, depending on what the client wants. But once the asset is on the transaction account, you can turn on auto top up on your loan. And what that does is pre-authorizes Ledden to move as much Bitcoin as is needed or available on your transaction account, and make that loan collateral if and when your loan ever goes, the LTV goes above 70%. So the system just sweeps whatever is on that wallet and tops up your loan. So every client that has had that service activated has been able to meet their top ups without liquidations. It's pretty battle tested, this feature, actually, which is something we're really, really proud of. The other thing you can do is you can make a partial repayment on your loan. And you can do this with stable coins. We suggest stable coins. You can also make partial repayments with fiat, but that's a cumbersome process, and your loan will be at risk until that fiat hits our bank account. So it's not the best tool for you to use in a fast-moving market. You can do it on the platform in real time. You can repay with USDC, partial or full, your loan amount, so that also helps your LTV come down. And then the third one is, which is something that some clients can use depending on the situation. You always have the option at Ledden to repay the loan using the loan collateral that is currently on the loan. So you are basically saying, hey, Len, deduct what I owe from my balance and send me back whatever the delta is. So you can repay with dollars, partial or full. You can repay with Bitcoin. That's a full repayment. You can't do partial repayments with the collateral. Or you can use auto top up or send additional Bitcoin. You also get an on-chain address for additional Bitcoin if you want to send it from self-custody. So you have ways of sending it from an external wallet, ways from sending it from internally, and ways from repaying both internally and externally.
I see. Okay, I got it. Got it. Interesting. Yeah, that's certainly something that helps. Yeah, if you have like these automated features for sure. I mean, in terms of risks, from the perspective of a borrower, can you also talk us or walk us through the risks, that you see or that a borrower needs to be mindful of? I kind of see flash crash, forced liquidations, like because like the price is moving. So what else is there? How can people again protect probably by managing in real time then the LTV? But what risks are there that people need to have in mind?
It's a great question, and one I wish more people would ask. So I generally like putting risks from borrowing against your Bitcoin in two buckets. There is counterparty risk, which is your risk of choosing the right counterparty and making sure that they are not bad actors and they're not going to go rogue and they're not going to do bad things with your Bitcoin. That's risk number one. We saw what that looks like in 2022. Because a lot of lenders that used to be here are no longer here. And we actually had to go in and help people from the bankrupt Celsius refinance into Ledden loans because they were bankrupt. And we brought in, I would say, 80% of that book that opted to refinance. So that has that's something that that should be very at the forefront of everyone's minds right now. Is there will be lenders coming up, whether new or old firms that are strapping it on, or most of these are new operations. They haven't been through a market cycle, and we've seen what happens when you trust your Bitcoin to people that frankly don't know what they're doing. They might look like they have a lot of money. They might look like they may have a lot of resources. Celsius and BlockFi were masters at that. But the reality is that what you see in the marketing materials is oftentimes very different than how the company operates in the background. And so this is why we are obsessive about proof of reserves. We are obsessive about our open book reports. We were the first lender, and still, to my knowledge, the only lender to offer these verifiable by a client. So Ledden operates basically at a different standard than all of these other companies did. And we can set up a whole other podcast on how Ledden is different. But what I would recommend to a person or to a client considering a platform is check out how long they've been in business for, check out who's backing them. Do they have a token? If they do, run. If they don't, you may consider them. And the fourth one is, what assets do they support? Because another thing that Ledden has been very, I think, disciplined at is we don't chase shiny objects. We take Bitcoin as collateral. We recently added Ethereum to support some of the bankrupt clients from Celsius. That's it. We do not support any other altcoins or tokens or anything of that sort. We support two stablecoins, USDT and USDC, and we support two collateral assets, Bitcoin and ETH. And we don't have a token. We never have. We don't have plans for a token. And I would say, are they regulated? So we're fully regulated under SEMA. That's another one. And can they tell you where they get their funding from? That's a really good one. That's a pretty simple one. I can point to you and tell you we get it from banks. Like I have an announcement I could show you with Signum, one of the biggest banks that we did the first ever syndicated Bitcoin backed loan in public. So the last one is I would caution you from things that seem too good to be true. If somebody's offering you a rate 5% below Lenin, you should really think as to what is the like how sustainable and real is that capital, and how much of it is just a marketing ploy to get me to get something that's new and untested.
Yeah, exactly. In the end, there is this saying, among Bitcoiners, if you don't know where the yield is coming from, you probably are the yield. So that's exactly what we're telling you here right now. So yeah, this is the counterparty risk that you eloquently now explained. That's great. But then again, in terms of like from a borrower, if you have chosen a certain platform, like what other risks do you see there? Is it like mostly as I said, the flash crash, price is volatile and you can get liquidated, or is there other things that people need to have in mind?
So Lenin, the main thing is don't default on your loan, right? And the way you default on your loan is by either, at Lenin, there are no monthly interest payments required, and there are no monthly principal amortization payments required. So you will not default on a loan because you don't have to make monthly payments of interest to us. Like your loan will not default on those grounds. Your loan could only default if you let your LTV get over 80%, right? So from a servicing perspective, at Lenin, that is the main thing you need to watch for. Once you've decided, say you made the decision, you took a loan from Lenin, and now you just want to make sure that loan is not liquidated. Well, and so you can then you turn on auto top up. You can also proactively over collateralize the loan, right? Like our loans start at 50% LTV, but we have clients that send way extra Bitcoin so that their LTV is always below 20. That's obsessive. That's like an extreme case. But we have clients that like generously over collateralize their loans because they don't want to have to think about it, right?
Yeah.
And so they go about their lives not having to think about top ups.
Exactly, because that would be my follow-up question. We've mentioned this 50% LTV, but as you just now said, you can go lower if you want, because as I said, if you are this super conservative Bitcoiner who is now, but I don't want to sell, but I need some fiat liquidity right now, then that's like stuff that I was thinking about, you can kind of go, okay, maybe do an LTV of 10, 15, 20% max, because then the Bitcoin price can drop by a lot and you're still probably kind of safe, and you can still have like some more Bitcoin in custody that you could send out if we get ever to this 20% or something. And then maybe also in terms of ideal duration, is there something that can you choose the duration? Like if you say, well, I want to go, I don't know, 4-year cycle, I still believe in this, I want to go 6 years, for my credit, because then I know maybe Bitcoin is going to be higher anyway. So what are your thoughts there?
So before I answer your term question, one other benefit that I don't know many people know of is in the same way we ask you to send additional Bitcoin when the price of Bitcoin drops, you can, from Lenin, with 3 clicks, redeem excess collateral from your loan when your LTV goes below 30%, right? So even if you are one of these people that voluntarily over collateralizes it and then says, oh, you know what, I'm going to take some of this Bitcoin out. I maybe overdid the whole I overtopped it by too much. I want to take some Bitcoin off the table. You can do that through the platform. So that's another thing. And we're seeing a lot of that now because many clients took loans when Bitcoin was 50, 60. Bitcoin's now 100. Their loans are wildly over collateralized, and many of them are taking coin either to self-custody or opening up a new loan to start a business, buy a house. Obviously, they can do what they wish with their asset, but you can also do that.
Could they also kind of repay it with the value that increased, sort of, is that exactly what they can do as well? Like, because the loan almost pays itself at some point, if you have it long enough and Bitcoin rises really beyond any imagination, then it repays itself.
Yes. So we are seeing clients take advantage of the loan. A lot of people took their loans to buy more Bitcoin with a particular price goal for that investment. And that just happens to be 95, 100. So many clients are closing loans. It just so happens that many more clients are taking out new loans. And it just sort of, the net is positive growth. But yes, to your point, a lot of clients, and you can see them on Twitter. Like if you Google let loan, you'll see people posting about, I took out this B2X 3 years ago to buy more Bitcoin. It has now reached its goal. I have now sold it for X many profit. So definitely people use the higher prices to repay the loans. The question on term, at Ledin, the term, when you take a Ledin loan, the standard term is 12 months. And the loan can be repaid at any time, partially or fully, with no penalty. So even if you took out a loan today and you decided to repay it tomorrow, you can do so. We don't penalize you for doing this. When the loan reaches its 12th month, like the maturity, it reaches its maturity date. If the LTV of the loan is below 60%, which is what we consider optimal health, right? Like if it's below 60% LTV, the system automatically rolls the loan into a new 1-year term. That can also be repaid at any time, but it just rolls. And I have had clients that have rolled their loans 4 years plus and never sent us a dime. All they've done is manage the collateral. And many of these guys have used the proceeds to buy property, the property they live in many times, or to start businesses, or to fund very long-term investments. And they see great benefit in the not have to make the monthly payments.
Yeah, exactly. Because that's another learning from TradFi again, from these wealthy TradFi people. I mean, that's usually people are like, oh, you have loans, and then at some point you need to repay it. You need to kind of scrap up all the funds. And then like these people tell you, well, no, there's no paying back of loans. Also, Saylor has been pushing this like sentence, say, no, I'm if there's a loan coming due, I'm just going to roll it. That's how it works. And then obviously, there's some risk to it, but I think there's some probably point to that. That like a lot of these rich people in the fiat worlds, they use this mechanism of rolling stuff and rolling loans. So that's certainly there's some truth to it, right?
Yeah, it was funny because I've seen this point discussed on Twitter here and there. And one of my favorite comments is Max Kaiser commented in one of the threads about loans and Ledin, and he goes, "Roll, baby, roll." But it's basically, to your point, right? Like you will roll and roll until such time as it's most beneficial for you to repay. If the underlying asset continues to appreciate every time you roll, why would you stop rolling? Right?
Yeah.
So that's really, and it's also like every investment and every portfolio is different, right? I'm not suggesting that rolls are the best thing for everyone to do, but many wealthy investors use this as a very effective tool.
Yes, exactly. Yeah, nice. Well, I mean, you were already telling us that like some people are taking out loans to buy more Bitcoin, So this is maybe another question that I would have, like you have any insights into what people are doing with the money that they take out through these loans? Is it mostly speculation, so to say, on like further price appreciation by Bitcoin, or you have people who actually let's say it a little cautiously, but like do real stuff in real life, like, I don't know, finance a company or maybe even buy a new flat screen for home or whatever. I'm just like assuming you have any insights there.
Yeah, tons of insights actually. So at Ledin, which is also a unique thing to Ledin, we offer 2 loan types. We offer the standard loan, which is you post Bitcoin as collateral. We give you dollars, then you use those dollars to do whatever you want. But we also have a loan that allows you to use the Bitcoin you have as collateral to buy more Bitcoin. So basically what we see is in a stable/bear market, the proportion between one loan type and the other skews heavily towards Bitcoin-backed loans. So I would say that up until probably October of this year, like pre-election, I would say that we were seeing about 7 Bitcoin-backed loans come in for every 3 B2X loans. Okay, so 70% skew to people taking dollars to do real life things, to your point, right? And those real life things can sometimes include using those dollars to potentially buy other types of digital assets. But that's a sliver of that use case. The majority goes to buying real estate, starting businesses, um, and like real life expenses. So that's the majority of.
Exactly. And where's the demand mostly coming from? Is it from Latin America or the US or Canada, or can you have it say to something to this as well?
Yes. So we service clients globally. So the way our volumes are split, it's actually pretty nicely split into Europe 33%. So basically an equal three-part split between Europe, North
Mm.
America, and Latin America. That's effectively the split we see. Now, um, in North America, the average loan size tends to be higher. And the use cases in North America tend to be, you know, more so than in other parts of the world. They're doing this for real estate purchases, to start new businesses, or to a lot of Bitcoin businesses use us to finance their operations. So a lot of companies with Bitcoin under treasury, we service a couple of publicly listed companies that have Bitcoin under treasury. They want to take loans to basically maximize their liquidity or optimize their liquidity. And so we service all the way from publicly listed corporates to individuals trying to buy property, right? Um, there's also, the your average developer who gets paid in Bitcoin and takes a $10,000 loan every month for their fiat life expenses. There's a variety, but that's really the use case. Uh,
Okay, I see. And what about Bitcoin miners? I mean, because they feel like, or it feels like they could be a natural fit as well, right?
Yeah, so we do service a lot of miners, primarily smaller and medium scale miners, like the publicly listed miners. I think some of them are able to access the public debt markets, etc. So, but we deal with more so, I would say, medium to small size operations that use us for as effectively they would use their financial entity or their potentially their bank, right? So
Mm.
they use us to get liquidity when they need to. We also have a product that lets you earn yield on your Bitcoin, so they can put some of the Bitcoin to work to earn additional yield if they want to. But miners, I started out as a miner, so the product was initially designed for miners. We just, realized or learned that everyone has a similar income statement and balance sheet to that of a miner. Like, you want to be earning Bitcoin, even if you're not, you want to earn more and more of it. And whatever comes into the balance sheet, you don't want it to go out. So even though the product was initially designed for miners who earn Bitcoin income and have fiat expenses, as more and more people think like a miner, uh, more and more people look to have the same streams of cash flows, right?
Yeah, exactly. Yeah, exactly. You start as a miner, as you said. So it's always nice if you have like this idea and then you can develop a business around it for sure. Well, I mean, one last angle that I would like to quickly explore is I think you've already alluded to this as well. The banks. You are collaborating with banks. I think, as you said, some of the banks are probably lenders on your side, I would assume. So, like, people have been speculating about are banks entering this business, and what type of also kind of consequences could this have, because like I've read that interest rates nowadays for borrowers are still quite high in terms of like 14 to 20%. But then assuming that banks enter this industry, I would assume they have access to the cheapest capital available, so I would assume that the interest rates could come down. And if so, where do you think they could be coming down in maybe 2 or 3 years if this industry is developed more?
Great question. And so to kind of elaborate on your question, I would say that the banks aren't coming. The banks are here. Uh, it's just that you don't see them yet. Um, but what I would say is it's not for a lack of desire. Most banks want to be in this space. The challenge for them is from a regulatory perspective. And primarily that regulatory challenge or sort of restriction is coming from their US correspondent bank or their if they're a US bank, it comes from their regulator. If you're a foreign bank, it comes from you wanting to basically make sure that your relationship with the US remains intact. So it's in some ways it's an extension of Operation Choke Point. Uh, from the US. Like Operation Choke Point starts here, but it stems all across the world, right? And although you have seen some banks start getting into the space, our deal with Signum is a great example. Signum's a Swiss bank. The other banks that we work with were under NDA, so I can't tell you exactly who they are. But what I can tell you is that there's been a lot more appetite to innovate on this space from non-US banks right now, because they see that this is their chance to break into an industry that circumstantially the US has just not been allowed to play. It's like you have a great new playground, you know it's going to be phenomenal, the world's going to be on it, and for whatever reason the biggest kids in the class can't come in and play, and the playground's free for you. And so the big kids are being like, don't enter because we're not in yet. And you're saying, well, you're going to play anyway. So they're starting to get in and seeing like, well, okay, well, if I know how to build here, I'm going to have a leg up when you come into the sandbox, right? And so there's definitely been penetration and activity by banks. And I think that you're going to see that exponentially grow once the US becomes a little more unrestrictive to their banks.
Exactly. And then interest rates should probably be coming down, right?
And yes, to answer your question, so I've famously said, I see a world where borrowing against your Bitcoin will be cheaper, faster, and better and more efficient than lending against US real estate. And the rates, when we started lending, our rates for our loans were in the 16 to 18% range. And that's when interest rates were at zero. Okay, so the spread between loan rates and Fed funds rate was basically 16%. Today, Fed funds rate is at 4.75, call it 5, call it an even 5. And our rates are at 13.4. So the spread has halved in 4 years. It's gone from 16% to 8. And I think that over the next 2 years, it will halve again. So I see a world where borrowing against your Bitcoin should be a few points higher than overnight funding rate. But that will require a regulatory tailwind. That will require the biggest capital allocators in the space getting into the space. So it will take time. But I think inevitably, you will be better off borrowing against your Bitcoin than against your house.
Yeah, that's a very interesting statement. And this is because in the end, you would say Bitcoin is the better collateral, or like because it's more liquid, it's more easily be sellable, or what's the reason? I mean, that's quite a statement.
It's a combination of things, but I'll give you an example. I don't have to appraise your Bitcoin. I don't have to send an appraiser to go figure out how much your Bitcoin's worth. I don't have to look at your income statement or see if my income is true or not, or if it comes from a reputable company or not. A mortgage is not a loan on the property, it's a loan on your income backed by the property. So they have to verify both your income, your employer, and the property itself. That takes time and money to verify these things. I have to verify none of those things when I'm issuing you a Bitcoin back loan. I know you're good for it. I have the Bitcoin and I know how much it's worth. So all I have to do is make sure that you are KYC compliant and that you're not on a sanctions list, and that basically you pass my AML KYC process, which they have to do as well, along with all the other sorts of stuff that I just listed. Okay. Number 2 is, if you default on my loan, I can sell your Bitcoin instantly. Over the weekend, 24/7, over a holiday, doesn't matter. And I can also sell a fraction of your Bitcoin. If you default on your mortgage, I can't sell off your living room, right? Like I can't sell off a door off of your car. I have to evict you and get the whole thing rid of, right? Massive problem, massive headache, okay? And then you have those two things. And on top of that, your house, even the largest, best real estate lending market in the world, is one country. My asset is global. I don't have to care that your Bitcoin is in some part of Baltimore versus a different part of Miami, right? Like your Baltimore Bitcoin is just as good as your Miami Bitcoin. So there's just a plethora of things that make it better. My TAM is the world. My TAM is not Minnesota or whatever state I have a mortgage license on, right? So it's a much bigger market. It's a much better asset, and it's much faster to move. So for all those reasons, I think it's going to be the world's collateral.
Yeah, the world's pristine collateral. Well said. That's these are some interesting points. Definitely, I can't sell my living room. That's a good one. Nice. Cool. Hey, Mauricio, thanks a lot. I think we're at the end. We're out of time, but it was just great. Thanks for all the points that you shared with us. Anything you want to leave our guests with, like where they can head, where they can find you? It's just would be interesting. Yeah.
Yeah, well, you can check us out at ledin.io. Our social handles are at hodl with Ledin. And my handle is cryptonomist with an A at the end, cryptonomista. And what I would say to anyone that just has built their Bitcoin wealth and is looking to potentially borrow is I'm not going to tell you to go with Ledin. I'm going to tell you to do your research. And I'm confident that your research will lead you to Ledin, but do your research.
Great. Yeah, cool. That's amazing. That's certainly people. That's always good. Do your own research. That's certainly a mantra that every Bitcoiner should know. Well, I mean, I have one last question. That's the question I almost forgot about it. It's the question I ask to everyone, like that's on my show. Like, can you name me another high signal person that we should be talking to? Anyone that comes to mind that recently is like, oh, that's something you or a guy you should be talking to, or a girl or whatever.
I really enjoyed. I have this podcast for Ledin that I do, and I've had a couple of people I've enjoyed every single conversation, but two of the most eye-opening ones recently were Dan Tapiero, who is 10T. He's a macro investor, gold macro investor. He was a Bitcoiner before Bitcoin existed. He's one of the early gold bugs, right? Then I've had Raul Pal, who has a very interesting sort of broader crypto look beyond Bitcoin, and his reasons are also quite interesting. And then I'd say those two, and then Anthony Scaramucci was a brilliant guy because I found him super interesting because he's a person that gets Bitcoin, gets crypto, but before the election, he was a big proponent of the Democrats and Kamala Harris. So I always like hearing people's opinions on both sides of the aisle. So I thought those three people would be great, and I'd be happy to make an intro if you want to connect with them.
Sure, at some point it would definitely cool. It would be cool. Yeah, I know about Raul, yes. Dan, I think I follow him on Twitter as well. And then Anthony, yeah, I met him in Lugano when he was here, and he was definitely an interesting person or should be an interesting person to talk to. Yeah, because of his way he thinks. So great. Yeah, Mauricio, thanks a lot. I think I want to let you go, that you can go to your next meeting, and maybe we can do a follow-up at some time, but it was very nice, and thanks for taking the time.
Absolutely, Pascal. Looking forward to doing this again.